Good morning, everyone. This is Brad Matheny. Just a quick follow up on the morning video. Bitcoin has rolled back up to this peak again. You can see we had this early morning peak. We're running into resistance here. This could very well be a topping pattern setting up. We will see how this plays out over the next day or so. But again, I'm a little concerned that this spike here on the 15th, yesterday, set up the breakaway, established a new high. I mean, we could melt upward, like I said this morning, but this continued rejection at this level. Price got above it, rejected, got above it, rejected, tried again, rejected. Pretty clear indication at this point that this rejection and lower low, lower highs are starting to set up, meaning that we could see a fairly solid downward move. SPY is struggling to kind of get out of its own way today. We are kind of in that buy here mode after the deep rotation. I think we could see a rally setting up through the next couple of days. At least that's what my pattern suggests. We'll see how this plays out. QQQ is same type of setup, rotating, flagging. You can actually see the flag coming across here into this mode. And here, off of these lows, we actually have a flag kind of setting up like this. If we look at this from the high, and again, might be better to go down to 15 minutes. Yeah, there we go. So if you look at this from a concept of setting the low and coming back off this high, you can see an A, B, C, D, E maybe type of setup, indicating we may find support down here. We'll see how this plays out because this is a pretty solid peak on the NASDAQ. I mean, if we were to look at this from a standpoint, I'll get rid of this and try to look at this from a standpoint, again, 15 minutes, trying to get this flag in. Remember, excess phase peak patterns play out everywhere. So you can see we rally up, we pull back, we flag, we break to new highs, we rally, come back up, come back down, flag, break to new highs, we rally, come back up, break flag, break to new highs, rally, come up, pull back, flag, break out of the flag, sideways, break to new highs, rally. So here we have the come up, we peak, we flag, we break down on this move yesterday, looking for our consolidation here, moved into consolidation off of this low. That's our phase 3 and 4, breaking down to our ultimate low right here. Okay, so here we have our ultimate low. You follow me, guys? Now, here we have this downward cycle trend here, basing to potentially our ultimate low, coming back up, and now attempting to flag sideways, kind of like this. So what we're looking at in this manner is an inverted excess phase peak pattern on the Qs, the QQQ. And in this particular case, if this pattern sets up and rolls, the next move would be a roll higher to some point where we're going to run into congestion, consolidation, and then a breakaway back up to new highs. So understand that where we're at within this flagging is really an inverted excess phase peak pattern. After reaching this peak, number one, go back to white, set this to 14. Then we have our flagging, which is our number 2. Then we have our breakdown of flagging, which is number 3. Then we have our consolidation, which is number 4. And then we have our breakdown to an ultimate low, which is number 5. So there's a complete excess phase peak pattern from peak to flagging to break down to consolidation, to break down to the ultimate low. If this holds, and this is our ultimate low, and we are rolling into this pattern here, then what's next is this move right here is a roll upward on the Qs, which aligns very well with my analysis. After consolidation today, you can see that we're looking for a buy off of these lows right now, expecting some upward movement over the next 2 or 3 days, leading into Monday or late Friday. So again, if we get this move, we'll get a breakout, run into consolidation, and then potentially move up to the ultimate high. Okay, let's take a quick look at gold and silver. And you can see how these excess phase peak patterns play out beautifully. I mean, look, this is a 15-minute chart. And what's the first thing I see? Let me get rid of some of these. Well, I'll leave them because it's fine. I can go through this with you with all these lines. So we come down. Let's go back over here. Oh, gold is moving slow. Okay. Maybe it's still loading. All right, so that looks like our ultimate low right there, right? So let's have some fun with this, right? No problems. We can figure it all out. We find an ultimate low or we find an ultimate high, and then we can turn around and essentially do the excess phase peak pattern. So what we'll do is we'll do this one first. We'll come up to the high. We will roll down to look for flagging. Remember, what's important when you understand flagging is that flagging leads to the breakdown towards a new low. So I'm going to draw these in yellow. Flagging should lead to either the breakdown to a new low and then consolidation, or the breakout to a new high, which we didn't get here. What did we get? We got the breakdown into consolidation. So there's our 3 and 4, ultimately then leading to the breakdown to the ultimate low, a perfect excess phase peak pattern completing 5 waves. Now look, this ultimate low sets up a low, pulling back up, flagging, and I think I might have to clean up this gold chart, flagging into this sideways channel, now breaking up to the phase 3, setting up a temporary high, creating a congestion period right here, and breaking to an ultimate high, which in turn sets up a flagging pattern that rallies up to a new high. So now we've got our new high right here. We could continue to move higher, but at this point with this pullback, if this turns into an excess phase peak pattern, we would be looking for flagging of some sort, leading potentially to an upper, either an upper breakout or a breakdown in price over in this area. So understand that really off of these excess phase peak patterns, you can see where we're at. Okay, we've rolled up into this area. You can see this excess phase peak pattern. And remember, we talked about how this move really back over here on this 30-minute, I talked about it this morning, how this move sets up a very broader, this is the bigger move here, this red channel, bigger move, deeper low, rolling up, flagging, breaking into consolidation. So even though we've hit the shorter term, this excess phase peak pattern played out completely to 5. This bigger one here is rolling into phase 3 right now, which means that we will eventually roll up into an ultimate high level on gold, potentially. So we'll see how this works, but we're looking for consolidation in this area and potentially flagging right now to the upside in gold. Now remember, my analysis today was that we would get a pullback. We would get flattening pullback into part of the day tomorrow and then looking for a rally to the upside. So we'll see how that plays out. And then I think we've talked about Bitcoin already. Bitcoin, like I said, is really struggling up in this area, and I think we could get a breakdown move, breaking below this level right here. So if I could drag this, well, I'll just draw over the top of it. I think move well below this level. I think this is the next move. If Bitcoin fails up here, I really think we're going to get that breakdown, establishing a low, breaking below this level, maybe coming back down into these levels here. But very strained upward movement right now in Bitcoin. Okay, the other thing I wanted to point out in this video is when you're considering a market collapse, you really want to consider the fact that in a general market collapse, you're going to start to see some contagion type movement. So let me go over here to 2 hours. This is a crude chart. And what I want you to see is that we've rolled downward into this flagging formation. So again, we've got our low, we come down off of this ultimate low, we come back up. We're in a broader flagging formation, excess phase peak pattern. We break, and now we're up in this area. Okay, we're looking for consolidation into this area, which we certainly have some extended pullback here, still avoiding this level here, which would be the maximum essential level of the flagging. In this scenario, what would happen with this setup? And again, you can see the lines I drew months ago. Get rid of that. Get rid of that. Is that in this scenario with the excess phase peak, we're either going to get one of two outcomes, which is again, we're either going to come back into this area and then break to the ultimate high, or we're going to continue the downtrend, which means that we will break down below this level and then ultimately below this level and break down to some sort of a new low. So what's happening at this point is I would have expected moderate consolidation, potentially breaking out here. This is a pretty deep move. Normally, I mean, you can see even with a Fibonacci extension or retracement, you can see from up here down to this. Well, I got to do it the other way. From the flagging low up to this level, we've already gotten down below the 618 level. We're down to the 764 level. So there's a pretty good opportunity here, probably about an 80-85% chance right now that crude oil breaks down below $65.78 and tries to take out maybe the 61, 62, 63 area. But what we're not seeing yet is we're not seeing this type of breakdown in the broader market. Financial sectors are doing very well. Again, this is a 2 hour chart. You can see we're looking for excess phase peak patterns. We come up, we move, we flag, we break down, we fail to get below this low, we roll right back up to a new high. It's going to continue to find a new high until it starts to break down and sets up some new flag. So we're in a solid uptrend on the financials. We are in a solid uptrend. Let me get rid of some of these lines, all of them. We are in a solid uptrend all the way up, rallying up, flagging, coming down, flagging up to new highs. Okay, rallying up, coming down, flagging, roll down, we reach that new low, we start to consolidate, and we revert back upward. So this was essentially a 1, 2, 3 setup on an excess phase peak. You can see it peaking, coming down, flagging, got to new highs, and rolling back down. Now we're back up at new highs. Transportation and financials, I would suspect, would be one of the key elements, as well as crude oil and metals, that would all move together. So, hypothetically, if we're going to see a crash, you're going to watch IYT transports. You're going to watch XLF financials. You're going to watch crude oil, and you're going to watch gold. So that's GC. If you start to see all four of these, in my opinion, start to collapse at the same time, if you start to see all four of these crash at the same time, then yes, we are likely moving into some sort of contagion event. And you may choose to, I mean, literally, I could create a custom symbol here doing something like this. XLF plus IYT plus GC, oops, plus GC plus CL divide by 4. And now here's your, even though it doesn't go very far, there's your master indicator. Let me see if I've got any daily data on this. Nope. So something is probably not working. Let's replace this with GDX, and let's replace this with XOP. Still not getting a whole lot of data. Oh, yeah, sorry. XLF. There we go. So here you have your kind of your blended consolidated symbol. Here's the pattern: XLF, IYT, GDX, and XOP. What we're looking at here, guys, is if we're going to get a crash like we saw back here in 2000 when the big crash, or we could hypothetically look here at 2022. But if we're going to get a crash in the markets like this, you can see here how this all started to react prior to the February 20th, 21st real breakdown in the market. So this is how you can build something that is going to tell you whether or not that the markets are really trending downward or not. And as you can see right here, we're in a very solid uptrend, channeling higher right now. So I don't see any real issue of a crash yet. Okay, yet. And I'll leave you there with that. This is a good little hint. Remember, here's the symbol. Here's the symbol that you may want to consider using to kind of watch for kind of a cross market crash analysis right there. And it's a pretty good idea that when the markets crash, all of those will be crashing at the same time. Okay, guys, that's it for now.